artificial intelligence race ramped up a notch this week and shows no signs of slowing down. Alibaba has released an AI model it claims surpasses the highly acclaimed DeepSeek V3. The Chinese tech giant announced a new version of its Qwen 2.5 AI model on Wednesday. The timing of the release is unusual as it lands on the first day of the Lunar New Year, when most Chinese people are off work and with their families. It could point to the pressure Chinese AI startup DeepSeek has placed on both overseas rivals and local competition. Alibaba said its latest version of Qwen outperforms DeepSeek, OpenAI and Meta's most advanced open-source AI models. This month's release of DeepSeek's AI assistant has shocked Silicon Valley and caused tech shares to plunge. The firm's supposed low development and usage costs led investors to question huge spending plans by leading AI firms in the US. But DeepSeek's success has also led to a scramble among its domestic competitors to upgrade their own AI models. The predecessor of DeepSeek's V3 model sparked an AI model price war in China after it was released last May. It led to Alibaba's cloud unit announcing price cuts of up to 97% on a range of models. Other Chinese tech companies followed suit, including Baidu and Tencent.
Tech giants Microsoft and Meta failed to impress the market on Wednesday as both companies delivered glum outlooks. Microsoft reported slower than expected growth in its crucial Azure cloud business and gave a forecast for the unit that also fell short of market expectations. Though the Windows maker did beat estimates for overall quarterly revenue, the wary outlook sent its shares down over 4% in extended trading. Investors are now demanding results from the hundreds of billions of dollars that Wall Street heavyweights have been spending to build AI data centers and infuse their products with the emerging technology.
Businesses, small and large, can improve their products.
Chief Executive Satya Nadella said Microsoft is working to make those services more cost efficient. Meta Platforms forecast first quarter revenue that could fall below Wall Street estimates on Wednesday. That may raise questions about whether pricey AI-powered tools are struggling to attract additional digital ad dollars to its social media platforms. The company predicted quarterly revenue between $39.5 billion and $41.8 billion, with only the very top end of that range above analyst estimates. That's according to data compiled by LSEG. Slower digital advertising sales at Meta, responsible for the overwhelming share of its revenue, suggested a possible sector-wide weakening as brands brace for proposed US policies that could destabilize the global economy. The weak outlook also raises fresh spending questions for Meta, which relies on its core social media ads business to cover costs associated with its AI ambitions and investments in metaverse technologies.
U.S. stocks ended lower on Wednesday, but off their lows of the day after the Federal Reserve left interest rates unchanged. The Dow dipped about 0.3%, while the S&P 500 and Nasdaq each shed roughly 0.5%. The indexes paired losses after Fed Chair Jerome Powell said monetary policy was, quote, well-positioned for the challenges at hand. Regan Capital's chief investment officer Skylar Winan said that despite recent volatility, the market remains resilient.
We're sitting in a pretty decent seat for the market looking forward to be able to absorb earnings releases and new data and the administration pieces to come out in the future. So I think I would breathe a sigh of relief that it's not down a lot more than what it is today.
Technology shares were the biggest drag on the S&P 500, with Nvidia down more than 4% and Microsoft also finishing lower. The losses came 2 days after Chinese startup DeepSeek's AI model sparked a massive tech sell-off. Reporting after the close, Meta Platforms said fourth quarter revenue beat Wall Street expectations, but predicted sales in the current first quarter may not meet forecasts, sending mixed signals about how bets on pricey AI-powered tools are paying off. Its shares, up slightly at the close, rose further in extended trading. Shares of Tesla, which ended down more than 2%, also climbed after hours despite quarterly profit and revenue falling short of Wall Street expectations. The EV maker, however, said it was on track to roll out new cheaper models in the first half of 2025. And Levi Strauss forecasts annual profit well below analyst estimates, sending its shares down more than 7% in extended trading.